Hello, Scott. Hey, Steve, what's happening?
Hey, happy Monday, Jamie.
Yeah, happy Monday to you as well. I feel like I've been gone a long time. It's only been a couple of weeks, but it's good to be back.
That is
Good to be
true.
back.
That
And
is
here
true.
we are, almost like a third of the way through September. It seems weird. Today's the 10th. But hey, welcome everybody to another edition of the Monday Office Hours webinar. I'm your host, Jamie Hodge. Of course, I've got my trusty co-pilot, as always, Mr. Steve Gomez.
I'm doing my hand
And
signal thing if you could see me. You know, everybody has like pistols or double pistols when you announce their name.
right. I'm gonna have to reinvent my symbol here. I don't know what it
Yeah.
should be.
I'm
Um,
shooting double pistols when you say that, just so you know.
excellent. All right, looks like we got a pretty good little crowd here today as well. Got some interesting observations, some of the same old, the stuff that works, but then got something new for you guys. I'm sure probably some of you out there have heard of the new filter that we've introduced, but we'll cover that today as well. Before we get into the good stuff, though, just a brief moment to make the lawyers sleep well at night. Just want to make sure everybody in attendance is aware of the fact that we present and share all of this information with you for educational purposes only. It's not a solicitation to buy or sell or do any of that type of stuff. If you do need investment advice, what to do, when to buy, when to sell it, all that good stuff, please seek out a registered investment advisor or another licensed individual like a stockbroker that can help you out with investment advice. But everything we share with you on these webinars, this one or any of the other weekly webinars that we host, is for educational purposes only. All right, and for the new people, for you regular attendees, just bear with us here. Always like to take a moment at the top of the webinars to let the new people know that not only do we have well, can't say the best in class, it's pretty much the only thing in its class as far as the software that we provide, Trade Ideas Pro. One of a kind software with 5-star service. And, we don't just set you up and turn you loose. We've developed quite the community around the product and very lengthy educational tutorials and webinars. So it all kind of starts off with what you see at the top here. The trading room that is free to all Trade Ideas users. And if you've shopped around trading rooms, you know that most of them are charging a pretty penny. But ours is hosted by Barry Anderson. He opens it up 30 minutes before the open every day. I think he just went on vacation. Correct me if I'm wrong, Steve, but I think
He
someone is
did.
someone
Yep,
is
he's gone till I believe he's gone for the rest of the week.
right. So Barry will be out, but the room will be open, so that it's still accessible. Barry does not like to leave, but of course his wife makes him go on vacation every once in a while, as well she should. So once again, a very mature room with 400, 500, 600 people in there. So a great place to go and learn and watch Barry trade on a daily basis using the technology and talking about his techniques, sharing scans and all that good stuff. And of course, today's Monday. I've got myself and Steve with Office Hours. Steve is going to take the helm on Tuesdays tomorrow for Trade of the Week and put his spin on the markets, and Andy Linloff rides shotgun with him. Break it up for you just a little bit on Wednesdays. Bring in the founder and CEO of Trade Ideas, Dan Merkin, along with our Chief Technical Officer, Mr. Brad Williams. So it's always a refreshing change of pace for Hump Day. Then Andy Linloff is going to round out the 5 p.m. Eastern webinars with Andy's Trading Studio, and I ride shotgun with him. Then Friday rolls around, and we like to do something completely different, which is basically just a free-for-all, come one, come all with anything TI related. Well, I say anything, almost anything TI related. And that thing kicks off at 11 a.m. Eastern every day. And as long as the crowd is there, we take it the full allocated 3 hours, lasting till 2 p.m. Eastern time. Now, not too long ago, we implemented another series of webinars because we used to offer one-on-one training, but our client base is getting so large, simply just don't have the manpower to do that anymore. It was great while it lasted, while we were a little bit smaller. But what we've done in the absence of the one-on-ones is we started TI University, starting with beginners on Monday, 101, 201, beginners on Tuesdays, intermediate Wednesdays, and then of course advanced on Thursdays, 401, which I teach as well. And then of course we just leave Friday open for the support webinar. So TI University is a great place to go and be a part of these webinars, especially when you're a new user, help you get over that learning curve sooner than later. Of course, we always like to show the graphic of when we introduced our first AI module, the original Holly 1.0, corresponding with the beginning of 2016 and how that's impacted our user base, number of users significantly. What this chart does not reflect is the addition of the other two Holly modules, Holly 2.0 and Holly Neo. So where there was one, there are now three, and there are more slated for the drawing board, and we're working on those as we speak, because there's going to be a lot of exciting things happening through the remainder of the year with the AI technology and being able to actually start to automate some of those signals, which we're shooting for the beginning of the year for that type of functionality, in case anybody was wondering. So that's going to be a whole new frontier to explore and see what happens when that day does arrive. Now, before we get into today's presentation, if you haven't done so already, now would probably be a pretty good time. Those of you who have absorbed the information in the ebook that myself, Steve, and Andy put out not too long ago have probably had some good downside trades or short sell trades materialize. Especially if you're a person that hasn't really had a lot of exposure to short selling, because when the market does turn, nobody knows when that's going to be, but it's a matter of if, not a matter of when. That's just the way the markets work. At some point in time, the bull market will be over and the bear market will commence, and if you already have this information locked into the old noodle, it's going to be a lot easier for you to switch gears and start taking some of that short money out of the market. Matter of fact, Holly was in a couple of good shorts today, which we'll take a look at here shortly. But you can just go to our homepage, put a / in ebook. That'll take you to the download link. This is free. So go ahead and get that information processed. And as Steve likes to say, chance favors the prepared mind, and you will be prepared once you absorb all the techniques listed in the free ebook. All right. I don't necessarily have everything on here that we're going to talk about, but in keeping with tradition, let's let Steve take the baton here and talk about big indexes and where we've gone, what he's seeing on the charts. So Steve, if you're ready, I kick it on over to you.
Sure. Red Rover, Red Rover. All right.
You are now it.
All right, so I'm prepared. Hello, trade ideas users, traders, investors. Starting with the SPY ETF, the ubiquitous S&P 500, the index from which all things are measured. I know it's been 3 weeks or so since I've spoken to you on this Monday podcast, but a lot of the stuff I was saying in my Tuesday webinar, pretty much the same, and that is there's no bear case to be made anywhere. We're in a major uptrend. We were flirting again with all-time highs last week. We've been given a lot more pullback and digestion than I kind of thought we'd see, but here we are, and still there's nothing really negative to report. What I'm seeing technically here, I'm going to get rid of some of these orange lines down below. And I use these lines as pivot points, and so here was, prior resistance for the most part, kind of became support. Back here, that was our range. Well, then we range bound and broke out of that range and pulled back, and now here we are playing the pivot game again, where the prior resistance back here in this portion of the uptrend is now acting as upside support. So there's absolutely no bear case to be made unless we close back down inside of this not no man's land, but this prior range. I mean, the idea is to continue to move through ranges and test pivot levels and bounce off support, higher base camps, and keep moving higher. But I guess what I was saying is there's no bear case to be made at the moment, but if we do get a close in between these orange lines this week, well, then that's going to be a little bit of caution thrown up there, because we could start to see some more sloppiness. But right now, there's really nothing sloppy about this market. It just keeps putting in higher lows and bouncing higher and holding true to form on a lot of these pivot points. So S&P 500 still looking pretty golden, above the 20-day moving average and above the 50 and the 200. The only thing I'm watching for again is if we do get a close back below this 286.30 level. That is the pivot level that we're currently working on and that we essentially held last Friday. So let's go to the NASDAQ under the Qs. And a little different story, and if you recall, probably the reason here is the FANG stocks, the Facebooks, Amazons, Googles, Twitter, Snap, some of those high-flying social media and internet stocks, they got a bit of a beating last week, and that translated into the NASDAQ taking a bit more of a breather. So with the respective line that we just looked at there in the S&P 500, we can see that respective line here in the NASDAQ was breached. So, you know, again, higher lows building off of especially Friday's lows. We're still above the 50 here. This could just be nitpicking in terms of closing back below that pivot point that's being shown. But again, maybe keep an eye on those Facebook, Amazon, Google, Netflix, Tesla, the FANG stocks that are out there, Twitter as well. If they continue to stay weak, that will probably drag the NASDAQ down with it. Matter of fact, I'll look at Twitter in a minute here, and we'll show some what relative weakness actually looks like on a day that was rather buoyant. All right, so the NASDAQ, a little bit more pullback, but still digging in and making a possible higher low above this 50-day moving average. Let's go take a look at the IWM. IWM is behaving just like the S&P did, okay? So there is our pivot line from way back here and the low end of our range down here. So we spent all of this time, you know, in June, July, and August in the range-bound Russell 2000 IWM. Then we broke above. And as I said so many times, the price action will come back and test the breakout just to, in fact, confirm that it is now prior resistance at becoming current support, which is, of course, the definition of a pivot level. So small cap stocks still looking pretty strong here, according to the Russell 2000 and the IWM. The Dow, let's take a look at the Dow. Not a real good candle today if you're looking at individual candles. Nobody likes to see big reds that close open on highs and close at lows. But again, bouncing off that pivot level early last week, we did it. There's our resistance. And so respectively in this particular Dow chart, we are still above that pivot level. So even though we had a bit of a down wash candle today, the Dow is still hanging above its near point pivot. So 3 out of the 4 ETFs are above their pivot line except for the NASDAQ. So, you know, if we can get some more NASDAQ tech stocks to bounce back up into play, this may be a nothing burger here, but this is the only bear case I can see. You know, the path of least resistance remains higher out there, guys. There is no resistance technically. We are in uncharted territories when we look left on some of these indexes and see no upside resistance. That's what all-time highs do. So it becomes kind of a momentum wheel until further notice. That's what we have. As promised, I said, you know, we'd look at Twitter. I'm noticing Twitter's having a really hard time here. I mean, let's just imprint on the NASDAQ and then the S&P that we just looked at. Twitter looks nothing like that. And then here was that down graph I mentioned last week, Wednesday, Thursday, and Friday. Horrible for these stocks and zero bounce whatsoever. So today, if we go and look at the S&P, we bounced off of the Friday lows. And so same, you know, with the NASDAQ for the most part. And yeah, I'll even look at Facebook and say Facebook bounce. But Twitter is just having the worst time trying to get even a dead cat bounce. I got a bad feeling about this stock. It's now closed below its 200-day moving average for the 3rd day in a row, and it's not participating with the rest of the market. So a lot of weakness over there in Twitter land. Keep an eye on that one. But that's basically what I got. Again, 3 out of the 4 ETFs we look at over here, Jamie, are above their pivot line. You know, path to least resistance remains higher lows, bigger base camps. It's just the NASDAQ had a little bit of a hiccup last week, and we'll see how it recovers from that. Oh, also worth noting, Elon Musk's and Joe Rogan's blunt that they smoked basically all the way back to prior podcast levels. So no harm, no foul for Elon Musk on that mess. All right, guys.
No, they blew that so out of proportion. I mean, come on.
He didn't even inhale. He probably should have been smart enough not to put it in his mouth, but he just he popped it in his mouth and kind of smelled it and never inhaled it, but not good judgment. But
if they were smoking cigars, drinking some whiskey,
exactly.
would the same reaction? I mean, technically he was in a place where it was legal, right?
It's all about image.
Yeah. Hey, there's been so much discussion about that, but in any case,
It's a non-event
hey,
based on the price action today. It's back to
exactly.
normal.
It's like a news play. Yeah, well, the news looked bad. Well, the stock went up. Anyway, yeah. And by the way, Twitter's a pig. The Twitter just looks so gross. Um,
Hmm.
and so I'm happy to see that. If you're short, yay, bravo for you. It's not like we haven't been talking about those stocks for a very long time now.
Hmm.
So let me go ahead and grab the helm here. And then, of course, the the leading pig is definitely Snap, right?
Of
Because
course.
that thing's got nowhere to go but down. It's in the void, and if Twitter doesn't recover soon, then it will also look pretty similar to Snap. We'll see. Time will tell. Time will tell. All right, ladies and gents, on with the show. All right, of course, expectations, they're always important. Matter of fact, any aspect of life, we have to have realistic expectations, because if we have unrealistic expectations, we're just setting ourselves up for what you might call disappointment. So, kind of the way that I was looking at the markets this morning. Let me just pull up the SPY here, and just so everybody can see, hopefully these charts are coming through clear. I got the daily up here, got a 15 for easy reference, as well as a 5-minute candlestick chart over here as well. So what was I thinking, as the market opened, first 15 minutes unfolded today? For those of you who attend on the regulars, you know that I like to look at my compare count window for the large cap stocks capitalized in excess of $4 billion, and just kind of take a pulse of, well, how much accelerated selling and how much accelerated buying do we have going on in these big names in the first 15 minutes, in order to more or less try to find the digital footprints that some of the market makers might be leaving, under the theory that they have big orders to get done. They're going to get a certain amount of those orders done in the first 15 minutes, as they always do. So they kind of leave footprints. And if we know what to look for, we can hopefully try to track those. All right, I saw a question come in. Looks like you knocked it out, Steve.
Yep, just gonna open up that window a little bit, and they'll go from icons to text.
Yes, indeed. Okay. So what do we have here after the first 15 minutes today? A pretty decent upside buy. It's not the biggest, but right at that magic 55% number. Typically when I see under 55% or right at 55%, what that tells me, what it means to me, is that, all right, there's going to be some upside potential today. It's not going to be a free for all, and there might not be, a whole lot of continuation. But if the timing is right, we may be able to pluck a little bit of alpha out of these longs. But I'm certainly not looking to hit any home runs. So that was what I had coming into the session after the first 15 minutes. Now let's backtrack just a little bit, because we always have to pay attention to what neighborhood we're in, right? And when we look at what was happening, over the previous 1, 2, 3, 4, 5, 6 days, coming all the way down to this little area of support right here. And of course, this was Friday, and what do we do today? We couldn't open up close to where we closed. No, that's not the way things typically work. We had to have a nice little gap up, which wasn't that shocking, right? And then we have the pretty decent compare count. Of course, what do we do after the first 5, 10, 15, 25, 30 minutes or so? We started regressing, never did close the gap, but, got a little bit into that territory. So once again, that's going to help me form realistic expectations when I do start trying to find some of these good long plays today. So let me get back over here to my cheat sheet here. So first and foremost, decent upside potential for the day, and then into Holly, because what we're going to do is we're going to talk about how Holly did today. We're going to talk about the trades that were good candidates for risk on, and then we're going to talk about the other thing, trade arounds, all right? Things that Holly's already in that you might not be in, but you look back over there after a busy opening 30, 45 minutes, and you might notice some things about Holly, and this is how we can interact with those. Then we're going to get on to the new filter that we've just released, the composite rating, which is getting a lot of excitement about this filter leading up to its release. And so we're going to cover that, talk about what it means, the readings, and how we can use this to enhance our existing windows or to completely new scans as well. And then some of the nice long plays that some of my stable favorite windows, like the Turbo Up Family No Resistance, kicked out today. So without further ado, let us talk about Holly. Now, real quick here are the three Hollies here, Holly 1.0, 2.0, and Neo. And as we can see, they all finished green. They didn't blow the doors off today, but some substantial greenness nonetheless. So let's just take a look at Holly 2.0 right off the bat, because things look a little bit different than they usually do today. Number one, we've got this guy down here, PTCT, showing risk on of negative 21 cents, but early in the day, this was one of the earlier plays that Holly spit out. And of course, I have to get used to my new time zone since I'm now in Texas, no longer on the West Coast, but in the central time zone now. So I'm like 9:25. Yeah, it's 9:25 because the market opens at 8:30 here. Don't get to sleep in quite as much as the East Coast people that have a nice leisurely 9:30 open, but hey, 8:30 is one of the silver linings as opposed to 6:30 on the West Coast. But taking a look at the PTCT play here, here's Holly calling the entry right here, and the blue line corresponding with their entry price. Of course, when we double click on the blotter, we get all this nice information populated on the charts for us, the stop loss as well as the profit target. Well, can't say it was pain free, but there was minimal pain here. We had a little pullback just slightly below the entry point, and then after that second 5-minute candle was done, boom, 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 just off to the races. And if you were quick enough to get that one, kudos to you, because you just got to enjoy that profit target, spiked and wicked barely above it, and then from the rest of the day just kind of cycled back on down. Looks like that one was just kind of following the market, the rest of the day. But it's weird. Typically, we don't see we'll see the profit target ones go on to make higher risk on most of the time. But due to the market of the nature of the market today, we got the high opening and then just kind of the slow grind back down to cover up a little bit of the gap, is why we're seeing the blotter look a little bit different today. On that same token, sunrise movers, one of the more profitable strategies that the Holly trio will come to the party with. Mayak. Steve and I were talking about this one before the market closed today, about how strange it was, because if we're looking at it on a 15-minute chart, not so obvious here. Of course, during the first 30, maybe even first 2 hours of the day, I prefer the 5-minute candlestick. I've always been a shorter term guy. But, I got to say, over the past couple of years, Steve has really sold me on the 15-minute and the 10-period moving average, which isn't a good example in this one, and we'll talk about some of the ones later on, and how that 10-period moving average really does act as the guiding hand on the 15-minute chart. But Mayak real quick here. So keep in mind, here's the open. So we got the first 5, 10, 15, 20, 25, 30 minutes is when we get the signal from Holly today. A nice entry right here, but then look what happens not too long after she gets the signal. I mean, just barely wicks through the stop loss here. Now, I'm going to go out on a limb here and say, doesn't this look familiar? How many times has this happened to us in the past, where we see what we think is a great trade, but guess what? Barely stops us out by a penny or so, and then what happens? Turns and burns and turns into not just a winner, but a pretty significant winner, right? So whether you took this trade today and got stopped out, or maybe you were busy doing something else and you look over and see Holly getting stopped out. When we see that, keep in mind the stop is right here. What are we seeing right here in this first 5, 10, 15, 20, 25-minute period here? Well, we're just seeing pretty much some nice tightening ranges here on these bars. So if we see a play like this come out, and then we promptly see Holly get stopped out, and our eyes are drawn to this, and we're thinking to ourselves, well, I know that this had statistical weight to it. Sunrise movers coming to the party today at 62.5%, and we know that Holly is not a magic money-making machine, because that doesn't exist and will never exist. But we do know there's a lot of heavy lifting going on behind the scenes every day to bring us these statistically weighted strategies. So sometimes the timing is slightly off. So we look over, we've been busy, we see Holly got stopped out, maybe it's flopping around right here. Well, just because of my, I guess, chair time over the past 20 some odd years, what I'm automatically drawn to is this tight little range, and then I start drawing my lines here, put a line here, we see that Holly got stopped out, maybe we see it regress back up, and we're thinking to ourselves, well, man, it just barely got past there. Tell you what, I'm going to take a stab at it right here, maybe get a little bit better price or the same price as Holly, and I'm going to use the bottom of this little range as my entry. We could call this a second entry. Steve likes to use the example all the time is the second mouse gets the cheese sometimes. And it really wasn't even well, I guess we could call this a second push to the entry line. It's just all happening in the same 5-minute candle here. So once this has been brought to our attention, and I hate to wear this analogy out, but it is a good analogy, like when Steve and Andy and all the guys that started Trade Ideas, when we started trading back in the olden times in the 90s, there was always a guy in the office that would be in this situation, bitching and moaning about getting stopped out, and then we take a look at it and go, oh, well, you got stopped out, get a better price, take less risk, and put that trade on. And, I always urge people to use the same approach with Holly, right? Except now we just don't have one. We have 3 different individuals that you can key off of. You don't always have to be first to the punch with a fresh signal. Sometimes they take a little bit of time to go. Sometimes they'll pass, ebb and flow back and forth through the entry line several times throughout the day. Another interesting observation is after it had its fun and there was plenty of time for profit, look at where it typically tends to hover around. That entry line then becomes short-term support for the intraday, right? So once you're already tuned into this stock, maybe you plucked a little bit out up here, maybe you said, okay, if it gravitates back down to that entry level, it might be worth playing again. And when it comes down here and tightens up again, you might be thinking, I might even take a second trade in this thing today, go back to the well, which a lot of traders get in the habit of doing, and it bites them. But then again, they're not playing with a statistically weighted entry either, because that brings up a good point here. This statistical probability is good for the entire day. So keep that in mind as you move forward and you interact with Holly on a daily basis. So that's an example of what we would term a trade around, right? Seeing Holly get stopped out and then capitalizing on it if we like what's been going on with the chart and it makes us feel comfortable. All right, so moving right along, I was mentioning earlier, we're going to talk about a short trade, right? Downward Dog produced a very nice winner in SUPN today. Really nice entry up here. We can see right here the entry line. Nice little short, immediately in the money, and then zaps right back up to that entry line. Once again, that entry line acting like the magnet again. So we had a nice little excursion. Sellers couldn't keep it down. It pops back up here, starts moving sideways. Now, notice the reason that Holly closed the trade out under risk off and flatted the trade. Profit save. Well, not much of a profit with the zero. It was probably profitable by a smidge, but by the time she closed it out, back to flat. But the bottom line is this. The longer Holly sits in a trade and it doesn't go the direction that it's supposed to, in this case down, then the longer time progresses, the more likely she is to close the trade out and say, well, I gave it a chance, it didn't work. But that's a time-based decay on that profit save functionality, as well as reduce risk. When she's down in a position and it's not working, she does have the option to close the loser prematurely as well. But these are in the same category here. We can see also the shaded area. This is the time she spent in the trade. So once it starts flatlining, she pulls the plug prematurely. But from a human's perspective, a little sideways action hugging the entry line, nothing to get too worked up about, right? It never got above this little area here, certainly never got close to the stop area, and all we had to do was give it a little bit of time, and then this thing released nicely. A little bounce here and there, but eventually making it all the way to the profit target area. So getting some of that risk on and risk off spread here between 0 and 65 cents. That's the name of the game here. We see Holly closing a position, and if we like what's going on in the chart, we can opt to stay in that trade, therefore accepting more risk, putting ourselves into risk on, which in my opinion is the best way to get used to going risk on, is on a trade by trade basis. Maybe you do a little both, right? If you're brand new and you're in a couple hundred shares here and you just really don't trust your chart reading skills yet because you've only been in the chair for a couple of months, and of course, people are different. We all learn at different rates. I'm a slow learner, right? So it takes me a long time to learn things, but typically once I get it down, it's there to stay, whereas some people learn a lot faster. But the bottom line is this: until you get used to figuring out what's best to go risk off, risk on, do a little bit of both. If you're in a couple hundred shares, close out that first lot for a flat, reset, your stop loss to right above here, or keep your hard stop for the second lot, and try to get some of this spread here, right? So it doesn't matter if you capture 30 cents, 40 cents, that's a lot better than zero. Never going to top ticket. Maybe every once in a while you'll get the most. Just like, hey, if I'm long, I'm going to top tick things every once in a while. But most of the time I'm not going to. I'm not going to get all of it. I just want something. And what that something is, what that percentage value is different for each and every trader. I noticed that today on a lot of things that I was tracking that we'll look at here shortly, after they got up 1%, it was pullback time. It was a little bit over 1% from my entry. It was pullback time. So if you weren't taking those cookies off the table, you ended up with crumbs or no cookies whatsoever. So this is a really good example of risk on. And of course, you can see the spreads start to decrease here. Only 17 cents on the DIX trade. Once again, a really nice entry from Holly. Pretty much pain-free, just straight up as soon as that entry was made. And pretty much not quite top ticked it before it took its little pullback, and then later on the day got stronger. And if you were already in tune with the stock because of Holly, well, then we can just put some lines on the chart here. If you were already long DIX, or you noticed that Holly was in it, later on in the day, if you knew that stock was in play, comes up here and starts popping these levels, you might have been able to get some of this. And the only reason that you would have been looking at DKS, more importantly, is because Holly brought it to your attention earlier, right? Or maybe it came through some of your other favorite trade ideas windows. So spread's not typically as big as we're used to seeing on a risk on day, but they're nonetheless, and the name of the game is just trying to capture some of the spread between risk off and risk on. All right, Francois has a question about risk on. Let me see if I can read it real quick and give him an answer. Holly's, we stopped out earlier with Holly's time stop. So the question is, if I take risk off on my time stop is later than Holly's, I will be stopped out earlier with Holly's time stop. Well, I think I understand the question, Francois. If Holly has a 60-minute hold time, which sometimes we'll see the time stop was hit, we're not seeing that on any of these trades today. Let's pop over to one of the other ones and just see if anybody made the timed exit. Okay. All right. So here we have several where the exit reasons were a timed exit. KEM, this short right here, is a perfect example. We see Holly take the trade right here. Trade starts to work. Why did she get out? Because the timed exit occurred first, not the stop loss, not the profit target. And on Bond Shorty, yay, Bond Shorty, I hadn't seen that one fire in a while. Okay, so we're looking at a 60-minute hold time for anything that Bond Shorty triggered today, right? So after an hour of trading, corresponding with the colored part of the chart here, we can see the timed hold expired. Holly did what she was programmed to do, took her money after that 60 minutes had expired, and made a 9-cent profit in it, right? Now, risk off and risk on, we're not really showing it. Finished the day pretty much exactly where Holly had covered it. But if we thought that there was more in the trade and we saw Holly exiting on a timed exit, we would have simply stayed in it, right? So I hope that illuminates your question, or I hope that addresses your question, Francois, assuming I understood it properly. All right, one more question here and then we'll move on. Barry was mentioning VWAP trend line is not really available. VWAP trend line. I'm assuming you're talking about in the chart, or is that a variant of the VWAP? That's what it sounds like, and I'm not really sure about that. If Barry was talking about that, I guess you'll have to wait till he gets back on
I
vacation.
know we've had a bug in our chart VWAPs, so I don't think they've been fixed quite yet, and that's all I know.
Right. Okay. So yeah, a little bit on the dark on that as well. All righty, moving right along here. Nothing's really sticking out other than the Domo. Some really good risk on opportunity here. Spread of right at 50 cents on the Domo trade. And she exited that one on a profit save, got a little nervous as we got into this little sideways action right here. This is a really good example of going risk on because Holly's in it. She exits somewhere right in here for a relatively small profit of 16 cents. If we feel comfortable staying in that second lot, say we peel out of the first lot, take the 16 cents with Holly, you can do it two different ways here. Readjust your stop loss on the second lot to a break even, in which case you never would have been stopped out here, and you would have enjoyed some additional alpha on risk on. Worst case scenario, you book your profit in the first lot. It does stop you out for break even. Maybe you flat it, maybe you lose a couple of pennies, but what you're doing is ensuring that that trade remains profitable. You got the first lot, you're going to give it a little bit more risk on the second lot in hopes of making more, but if it does roll over, you stop out for a flat, trade is still profitable, and that's the name of the game, ladies and gentlemen. And then keeping up with the Joneses here, not a whole lot of spread to be had in the risk off, risk on trades. And of course, looking at some of the losers today, you know, short play right here. Holly tries to get short, or she does get short, but it just doesn't work. Stop out here. You know, nice little lining up of the long money versus the profitability versus the shorts. And after everything is said and done, Holly Grail, the original Holly, up $1.05 on, actually, I don't know why we're seeing the Grail. Am I looking at the right thing here? Yeah, we got a 4 cents disparity here. I guess the servers didn't refresh there at the close, but $1.09 roughly speaking. So not the and the reason this does, you know, the reason I'm saying that this isn't what we're used to seeing is because Holly's been putting on the show over the past couple of weeks. So even though we're up in essence 5 points on right at 27, 46 trades, a little bit lower on the per share average than we're used to seeing, but some really good trades, some really good moves nonetheless. All right, so that's it for Holly today. Now let's talk about the new filter that we've just launched, and that is the composite rating filter. So you might be saying, well, what is it? Well, it is a proprietary filter, and we can't divulge the formula. And Steve, correct me if I'm wrong here, but the short answer is this. It's combining some fundamental data and some technical data and combining them to create our composite rating, right? And the highest composite rating is 100, and I believe the lowest one that we're seeing right now, Steve, is, it slips my mind right now, what the lowest composite rating is, but the higher the better, right? And we can see a couple of stocks at the close today, LSTR, CPRT, showing composite rating of 100. So anytime you're starting to see these things creep up into the 99 and the 100, that's definitely a good sign. So what I'm going to do here is just go back in time a little bit, because I did have a bunch more of these guys showing up, but as the day progressed, you will see some of them start to slack off or fall off the list. So let's just do this. Let's go back to 245. And of course, we added just a little bit more here. But if if we start scrolling through these guys right here, and keep in mind, I've just added the composite rating as a column to one of my favorite top lists here, which is my pack leaders top list, which is showing me things that are leading the market and busting out to new all-time highs. But you can add this composite rating to any window that you see fit, all right? More importantly, always add it to your single stock window. It's a great addition to your single stock window because as you're scrolling through your other windows, you can just sit there and notice, hey, in addition to the chart pattern and the high volume that this thing's kicking out, it's got a composite rating of 100 or 99, right? So starting to see things here come through one of my favorite windows. I'll get off my chart there. My Turbo Up family, no resistance, which is looking at things hitting all-time highs with accelerated 1-minute volume. This is a derivative of my Turbo Up family. It's also going to be very similar to one of Andy's favorite high-volume, high-low tickers, his High-Low Pro, which is the same but slightly different. He's looking at maybe a couple of different factors than I am, folding in some different time frames and accelerated volumes. But on mine, I like to see the new high, the new all-time high, with the accompanying 1-minute volume of 3 times normal or higher. And so LSTR, let's take a look at some of the stocks that were produced here today by the Turbo Up family, which also happened, Lister, to be showing a composite rating of 100 during the time that it came across. So once again, it came through my Turbo Up family, no resistance. I took the liberty of popping out that specific strategy since I have 3 in here, which are all segregated by market cap. Of course, LSTR was 4 billion and higher. Here we have the exact time that the nice crisp range break occurred, because we basically got this flagging pattern run up in the first, I can't even see, 5, 10, 15, let's just call it an hour for easy talking purposes. We put in that high and then we start to flag sideways here in this nice tight little range. And lo and behold, I look over here, I see LSTR popping a new high and happen to catch it right here with this beautiful range break. So we're seeing this range break occur. We got massive volume accompanying that range break. Risk is in place. The way I assess risk on these plays is not including the entry bar. We just look back 15 minutes, 5, 10, 15, put our risk level right here. If we can stomach that, it's a go trade. Risk area right here, and of course our reward area. I forgot to put my top line up here. This is what you want to see. You want to see this type of risk with this type of reward area. Now, it did throw us a little curveball, as these things sometimes do. A little bit of pain, but no stop out, and then back off to the races. LSTR, also when we look at it over here, we can see it's been on a nice little run as of late, got out of this little area of congestion, and then it's been doing its thing for the past 2 or 3 days and continued it today. Right? And of course, if we were privy to this stock in the prior days, we all develop a hot list. Hey, LSTR has really been on the move. If I see it come across and it's a pristine pattern the next day, it might be worth playing again, because we never know how many days these stocks are going to run. Could be 2, 3, 4, could be more, could be less. But once again, on the intraday 5-minute candle, a really nice tight little entry with acceptable risk and a nice reward area. And then later on in the day, I really do like watching these things once I'm in them on the 15-minute candlestick pattern. And notice, let me just make this chart a little bit bigger. Notice the green line, and notice how it was just surfing that 10-period SMA pretty much until the day was done, right? It's a very comforting metric. And I give full credit to Steve for turning me on to the 10-period SMA on the 15-minute chart, because it's a great indicator. It is. It's great.
Comfy.
It is very nice and comfy. So that was LSTR coming through my favorite window, but then also having the added benefit showing 100 on that new composite rating. All right. Now, talk about a couple of more. You might have known today, HD, Home Depot, was having a pretty good day today. Now, as soon as my chart decides it wants to populate here. Um, I never really saw Home Depot pop up, but I knew it was going up. It never really presented the pattern that I like until very late in the day, and then we can see what it did. But guess what? We got Home Depot, and then we've also got the fancier Home Depot. For those of you who like to visit home improvement stores, you know what I'm talking about. We had low, okay? So I see Home Depot, I'm like, it's chasey, whatever. But then guess what? Guess what comes strolling through my turbo family up, no resistance. Right here at this time right here is lows. And I'm like, hey, well, the Home Depot pattern was too stretched out, not my cup of tea, but look what little low showed me today. All right, we got this nice little range right here, whether we're wick people or candle body people, it's the same thing. It's just the range gets a little bigger here. Of course, when we see these opening candles like this and we see the big wicks, it's kind of comforting because it tells us sellers took it down, but they could not maintain control. Most of the volume was done up here, a couple of more little whiskers, and then back up to the top of the range. More importantly, as this was occurring, had plenty of time to get it, didn't have to chase too much, and at the same time, we're noticing that volume is high. Actually, relative volume was more like 2 at that point in the day, but on a big cap stock like this, that's a pretty hardy rating, right? So we had the accelerated volume telling us, yes, indeed, these patterns are a dime a dozen, but guess what? This one had gas in the tank. I know that if we get out of this range, we could get a nice push. That's exactly what happened today. Also, look at the nice little guiding hand that that 10-period SMA played once the day was done. And by the way, as I was stating earlier, this is a classic example of what I said earlier about what I noticed if you didn't take the cookies once you got up around 1% or so. You know, that's about this little topping area right here was just slightly up over 1%. And then we had a peel back. Guess what? Once we got under that 10-period SMA, never really recovered from that point. Steam was out and the profit taking was in effect. So once again, simple pattern. And, you know, hey, number one, let it be known to everybody sitting out there, I'm a simpleton, right? I like to simplify things as much as possible. That's why I'm such a big fan of these range breaks, especially when you see something like this on the daily as well. And if we zoom out on this Lowe's chart, I mean, talk about comforting, all right? We got a nice cozy entry here. We've got, in essence, the same pattern exhibiting itself on the daily. That's why I love these patterns so much, because number one, they're easy to define and they can be, or they are fractal, right? Same pattern occurring here as we're getting here. We use this to ascertain our risk. Got a nice reward area. We know it's healthy, it's breaking out. And by the way, it's hugging this 15-minute or this 10-period SMA like clockwork. And hey, that helps satiate the greed and fear demons that exist on all of our shoulders each and every day, no exceptions, right? So with these patterns, it's just about patience, right? I can tell you this, you get antsy, I'm not finding what I need to trade today, therefore I'm going to take something that's a little bit more questionable, and more times than not, that's going to turn around and bite you. Trust me, happens to me all the time. Still, you always have to be vigilant about being patient. And, you know, if we use the hunting analogy, if you go hunting for deer and no deer are showing up, that's just too bad. You can't go on a killing spree and start, you know, killing birds and animals that aren't deer, right? That's not the way you do it, right? And I'm not a hunter, but that's a really good analogy that makes a lot of sense. You know, we have to wait for the things that we're, you know, looking for to materialize, and when they do, we act. We abide by our risk parameters, and we let nature take its course. That's right, Waleed. Keep it simple, silly. And hey, simple is better in my opinion, but hey, that's just me. Now let's do a little time check here. All right, we got about 3 minutes here. Let me just see if I got everything covered here. Yeah, we talked about Lister, we talked about low, and then hey, even a little tell before the low came out as we knew HD was in play. When we see that low coming up, we're like, hey, same thing. So that gives us even more confidence to take that trade. So, Steve, anything to add before I turn it over to Scott here?
No, I just we are really liking that new composite rating, and so are the users. So we're going to continue. Oh, by the way, Michael has already submitted a new Holly base strat to the powers that be for something that does include that composite rating score. So when that does, if it does come out, we'll let you guys know that the new Holly strat will have something like that in there. But no, that's about it until I
So,
talk
Steve,
tomorrow.
were there any names being thrown around?
Yeah, there were some funny names. Straight out of Compton was mine, but I think there were some copyright issues on that. Trying to play out on the word comped. I like to use the word, it's in the 90s, the score of the filters in the 90s where you get your A's in college. And so I was thinking the A team or the A club, the A table.
Right. So, if you see something similar to that pop up, ladies and gentlemen, you'll know that it's using that composite score there. Real quick here, one more thing to add about the composite. You'll notice here, 1, 2, 3, 4, 5 of these guys at the close here. Now, CPRT had a nice little gap up and a run up and then kind of followed the market. I was looking at all the ones that were presented or that were being shown to me, and this looks like a pretty good complement. I think there might be one that was live in the market that's not up here, but for example, this INTU 100, once again, same old song and dance. Look at that beautiful little range break and then heading higher. I think there were 6 or 7 up here, and out of the 6 or 7, there were only 2 that did not continue higher, right? PRLB, a little bit thinner of a stock, and of course you might trade the thin ones, you might not, just depends, but the pattern is the same, right? And of course, is the composite rating the holy grail? No, but it's certainly going to be interesting to see how this composite rating is used, and more importantly, what kind of use Holly makes out of it, because you never know. We're going to find out soon enough. So keep your eyes peeled for a new strategy with some variation of the word comp in there, and you'll know exactly what that new strategy is. So exciting times. We got the rest of the week to see what happens, and it should be a good one. So Scott, if you're ready to walk us out, we're ready for you.
Hey, thank you. Sounds good. Let's pull the slides up again and go through the end of the presentation. There's a good ebook out, and everyone should get a copy. It's go to trade-ideas.com/ebook for that.
I'm sorry, Scott.
I guess this
There we go.
weird order now. You have the ebook up in the middle, so maybe you've already talked about it. But just a reminder to everyone to get that. We also have a podcast. New episode was out last week. Make sure you're subscribed to the podcast by searching for Trade Ideas Podcast wherever you listen to your podcasts. We've got a code for you that's good this month. The code is Save in September, 15% off your first month or year of Trade Ideas. Those of you that are not yet premium subscribers will be able to use that to do an upgrade as well. I'll make sure that that code's added. We've changed the upgrade path, but we'll make sure that's in there too. And if you have not yet started a Trade Ideas subscription, use that before the end of the month to save. Any questions, email us info@trade-ideas.com. And follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. Like us on Facebook, facebook.com/TradeIdeasPro, and share everything with your friends. We'll have a recording up later on tonight or tomorrow. Thanks all. Have a good one. Thanks, Jamie and Steve.
Hey, thanks everybody for popping in, and have a great, profitable rest of the week. See you tomorrow, Steve.
See you tomorrow. Yep, see you.
Bye-bye.